Hello everyone, this is Abhay Agarwal. I'm the fund manager for Piper Serica PMS. First of all, I would like to thank the team at PMS Bazaar for giving me this opportunity to talk to you. Uh, the one question which we are asked all the time these days is, have the markets formed a bottom? How far away are we from a bottom? I think there is a lot of concern with retail investors about should they be buying now, should they be selling now. Uh, so all we have done is we have done a study about which takes into account the historical PE multiples that Nifty has traded in the past and multiply that with the forecasted EPS of the Nifty. Now the Nifty EPS has been reduced by all analyst estimates by around 15% for financial year 2021 and 22. So if we apply the medium range of Nifty PE of 15 times forward, we get a number of around 10,000. And if we apply the lower 14.5 times, we get around 8,300. So I think we are bang in the middle of that range of Nifty range over next 12 months. We think that the Nifty can trade as high as 10,000 based on some positive news, stimulus from the government, recovery, and also at the same time, if there is more bearishness, we can look at trading closer to 8,300. If you're a long-term investor, you should not worry about this range of 8,300 to 10,000. I think as an investor, one needs to look beyond the next year and look at where we can get to in next 3 to 5 years time, because that is how significant equity returns are made. So our suggestion to all investors is to not only stay invested in good quality stocks, but also consider marginally increasing their allocation based on their overall asset allocation and buy high quality stocks where valuations have adjusted downwards. This is not the time, and it never is, to buy stocks that have got beaten down because the business models are broken. What this COVID-19 driven uncertainty will do in the market and in the business world is that a lot of companies that were trading on thin ice because of weak business models, weak competitive positioning, and also weak balance sheets will have a very tough time coming back. At the same time, the bigger companies will consolidate market share and will emerge even bigger, stronger, and more valuable. So our advice is to stay invested in the markets. Do not panic. At the same time, do not be greedy, but look at your overall asset allocation and consider adding good quality stocks to your portfolio, in a very tactical way. So this is a view on the market. I would also like to talk a bit about our strategy, what we call Piper Serica Leader Portfolio Strategy. Under this strategy, it's a top-down strategy. It is not a bottom-up stock picking strategy that most of the other mutual funds and PMSs focus on. What we do is we first try to identify sectors and industries in the country that will grow in a secular manner for next 15-20 years. And this growth is driven by the changing demographics of the country, younger population, consuming things in a different way, the consumption pattern, replicating global consumption patterns. So all of it drives a lot of industries. Also, an increase in per capita GDP, changes the aspiration levels of people. So once we identify these industries that we want to invest in, we look at which are the clear market share leaders in each of these industries. We want to only invest in companies that have a very strong competitive position. So we filter each of these leaders through Michael Porter's 5 forces model, where we rate them on a score of 1:10. 10 being highest, and the closer you are to 10 means the more competitive you are. So for us, we believe that long-term value is created when companies are very competitive. They are competitive because they have a very strong distribution system, very strong supply chain, very strong control over their pricing power. They exhibit pricing power. They have the ability to attract great talent. They have good corporate governance. So all these things put together creates a set of very unique leaders. We do not invest in number 2, 3, 4 stocks. We are not looking for the next 10 bagger or 20 bagger or 100 bagger. We want to build a portfolio, and we have been very successful in doing that, of a bunch of companies that will continue to grow for many, many years and reward the shareholders. And this is a kind of portfolio that people can sleep easy with. The market valuations may change because of the continuous volatility in the markets, but you can rest assured that earnings will continue to grow. So these are the kind of companies that we invest in. Second thing that we do is that we also manage risk and allocation very actively. We are not traders, but at the same time, we do not want any one company to have a share of more than 7% in the overall portfolio. We typically like to have a portfolio with about 20 stocks. Each one of them is a leader, and have standard allocations. In case, because of the run up in the price, the allocation starts increasing, we reduce the allocation slightly by booking profits and redeploy that fund into some other stock. So this strategy has worked out very well for us in last, if you were to go back 12 months since we have set up the PMS, we have beaten the Nifty by more than 13% points. We have beaten mutual funds. We have beaten most of our peer group PMSs. So this is a strategy that we are very comfortable with. And this kind of market drawdown has again reinforced our faith in staying invested in high quality companies where earnings are predictable, they grow. So if I talk about some of our highest, so our top 5 allocations in the portfolio are to companies like Hindustan Lever, Nestle, Apollo Hospitals, Sanofi, HDFC Bank, HDFC Life, ICICI Lombard. Quite a few of these companies, actually 3 of them, Hindustan Unilever, Nestle and Sanofi, have hit their all-time highs in last 3 or 4 days despite the meltdown in the market. So that tells you that, it doesn't matter what the market trades at or what the market levels are. What is more important for an investor is what do you have in your portfolio, because that really drives your return. So this is what I had to say, and I want to wish each one of you rapid recovery from this whole uncertainty regarding COVID-19. We have dealt through these situations earlier in the past as a country. We have always come on top, and I'm very confident that sooner than later this issue will also be behind us, and people will look at the current meltdown in the market as more of an investment opportunity than anything else. Thank you.